Hello, everybody, and welcome back. Today, my guest is Avo Ora. Avo is the head of Emerging Market Equities at Pictet Asset Management. Welcome, Avo.
Hello, welcome. Thank you for having me.
Avo, today we want to discuss recent developments in the Asian financial markets and especially for Asian stocks. So fears of inflation and rising interest rates are back in financial markets. How does this affect Asian financial markets so far?
Yeah, there are mixed views on that, or mixed impact on that for the Asian financial markets. On the negative side, we may see the region hit by a bit of a US taper tantrum, fears of US rate hikes. However, that will just be temporary. But we are on the inflation side seeing costs such as shipping and input costs affecting the margins of Asian exporters. But on the positive side, we're looking at these rates at the very beginning of a cycle rather than towards the end of a cycle. So we really shouldn't be too concerned about that. Also, when we look at the region, China has already started to tighten monetary policy, and we're starting to see the impacts of that slowing. However, looking at next year, that can reverse and be a positive backdrop. On inflation as well, some of those drivers of inflation, such as the global chipset shortage, is actually benefiting some countries and companies within the region. So it's a really bit of a mixed view of a bit of winning and a bit of losing.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
Emerging Asian economies account for roughly 70% of worldwide GDP growth during the last decade. How has COVID-19 changed the Asian growth perspective so far?
We take a look at that and we really see two changes that have taken place. On the one hand, what you've seen companies really look to diversify their manufacturing outside of China. So we are seeing an increase in investments and manufacturing in Taiwan, in Indonesia, Vietnam, and Thailand as those supply chains get diversified. Going forward, what will happen is that we could actually see a broader growth within that region. The second aspect is that we've been seeing an acceleration of online business models, such as food delivery and online retailing. And while China's really been at the forefront of this, what we're seeing within the region is other countries playing catch up. So we're seeing a really strong pickup in India, within Indonesia and the broader ASEAN. And there are ways that we can capture that through the companies we hold.
China has emerged from the COVID-19 crisis as the engine of global economic recovering in 2020. So what's the current perspective for Chinese stocks in the current market stage?
Yeah, we've certainly seen the China market sell off on heightened regulatory and policy fears. And while some of this is warranted, what we are now seeing is a huge gap in terms of China valuations versus its own history, as well as peers within the emerging as well as developed markets. So when we take a look at valuations, valuations do look interesting. The other aspect that we've been seeing in the last couple of weeks is a bit more clarity when it comes to penalties and regulations being put on some of these bellwether names such as Tencent and Alibaba. As we get closer to the end of this policy adjustment, we certainly could see these names start to outperform. We're also taking a look at is regions and sectors where us as investors would be aligned with government policy. Two of those areas would still be in terms of green energy and the targets that they have there, as well as a new push for healthy living. So there are ways that we can still align ourselves with the government and get performance out of that market.
The Asian assets are, despite the index inclusion in the past, still underrepresented in global investors' portfolios. What could trigger a change?
I think the key aspect to take a look at is a bit of the changing view on developed markets. What we can see is investors start to take a look at high valuations combined with the potential for monetary tightening, especially in the US, draw investor interest to what we're seeing in the region, which is low valuations, renewed growth, and monetary policy loosening going into 2022. So I think that is something that could shift investor focus. The second aspect is the need for a bit more clarity when it comes to policy and the extent of regulation in China. When we take a look at China, you have to keep in mind that the private sector contributes about 60% of China's GDP, 50% of tax revenue, and 80% of employment. It's in the interest of China as well as investors to support that private sector.
2020 has been the year of Asian and especially Chinese growth companies. Since that, there had been a discussion going on. Is it a time for a style rotation from growth into value? So which economies and industries in Asia have the potential to surprise markets in 2022?
In terms of looking at 2022, I do think China could surprise. We've had a rebasing of valuations. We've had a rebasing of expectations and risk perception. But on the whole, the market has been impacted by this uncertainty over regulations, the broader market. And that actually does allow for stock pickers to really be able to focus on those companies that either are insulated from that regulatory side, or whether that's priced in and then some. So it's really a stock picker's market right now. Thailand also could look interesting, especially as COVID recedes within the region. That would be a combination of both an increase of tourism coming back into the country, as well as manufacturing picking up again. And lastly, India has a great pipeline of new economy businesses that are looking to list. So keep your eye on the IPO pipeline in India. It's going to offer a lot of opportunities.
So Asian countries benefit from increased interregional trade. How can investors capture the potential of this trend?
We're really looking at two areas there in terms of capturing the interregional trade. One is on interregional shipping. So companies such as SITC within Hong Kong, as those supply chains get more evenly distributed, there is going to be a lot more travel between countries within the region. The other aspect is with a push on that distribution of supply chains, also SMEs within all of these regions are going to be benefiting. So SME lenders such as Chinese within Taiwan, that does lend not only in China, Taiwan, but Vietnam, ASEAN, is certainly a beneficiary.
So this was Avo Ora from Pictet Asset Management. Thank you very much, Avo, for being with us today and sharing your views with us.
Thank you very much.